Stop scrolling for a second. Because if you or someone you know has money sitting in a credit union right now, what you're about to hear might completely change the way you look at financial headlines forever. Imagine waking up tomorrow, opening your phone, and seeing the words financial warning, failures rising, and system under pressure. Your heart beats faster. Your brain immediately thinks, is my money safe? That exact emotional reaction is why this topic exploded online. People aren't watching because they love finance. They're watching because this feels personal. Money is not just numbers. It's rent, groceries, college dreams, retirement plans, security for your family. And whenever a headline suggests that safety might be shaking, everyone pays attention. But here's the real twist. Most people reacting to these headlines don't actually know what's happening underneath the surface. So today we're going to slow everything down, break it apart step by step, and separate real concern from internet panic. Because understanding the truth is what keeps you calm when everyone else is nervous. First, let's understand what credit unions actually are. Unlike traditional banks that answer to shareholders and profit goals, credit unions are member-owned institutions. That means they exist to serve their members, often communities, or specific groups of workers. Millions of Americans choose them because they feel more personal, more local, and sometimes more trustworthy. But just like any financial institution, they operate inside a larger economy. When interest rates rise, loans become harder to manage, and financial pressure increases, smaller institutions can struggle. That's when you start seeing words like failures appear in news stories and videos. And the moment people hear that word, their brain jumps straight to disaster mode. But here's something important that viral videos rarely explain clearly. A failure does not automatically mean people lose their money. The system is designed with protection layers specifically because regulators know that not every institution survives forever. Now let's talk about the part that creates the biggest emotional reaction, the insurance system. In the credit union world, federally insured deposits are backed by something called the National Credit Union Share Insurance Fund. The whole purpose of this fund is to protect members' insured deposits if a credit union closes or merges. And according to publicly available reports, the fund is not empty or collapsing. It has reported tens of billions of dollars in total assets and continued income, with an equity ratio around the level regulators consider stable. That's important because it shows that while financial stress exists in the system, the safety structure is still operating. This doesn't mean zero risk exists. No financial system in the world is risk-free. But it does mean the situation is more complex than fear-driven headlines make it sound. When people only hear dramatic language without context, their imagination fills in worst-case scenarios that often don't match reality. Think about the emotional side of this for a moment. Picture a working parent watching late at night after paying bills, trying to make sure their savings are safe. They see a title saying something dramatic like "Final Alert," and suddenly they feel like they need to do something immediately. That emotional response is powerful because fear triggers action faster than logic. And content creators know this. Strong urgency words increase clicks. Big percentages grab attention. System-level warnings make people curious. It's not always malicious. It's just how online attention works. But as a viewer, understanding that psychology gives you power because you can step back and ask a better question. What are the actual facts behind the emotion? Here's where things get really interesting. Financial systems are built expecting occasional failures. Regulators monitor institutions, and if one becomes unsafe, they step in to protect members and maintain stability. That process can sound scary, but it's actually evidence that oversight exists. Imagine if regulators never stepped in. That would be a far bigger risk. The fact that systems are actively monitoring and managing risk is exactly what prevents small problems from turning into large crises. Yet this nuance rarely goes viral because calm explanations don't create the same adrenaline rush as alarming predictions. Let me ask you something honestly. If the system was truly at the edge of collapse, would official reports openly show numbers about reserves, assets, and protection capacity? Would insured deposit systems continue functioning as designed? The reason this question matters is because emotional headlines often leave out the full picture. People start making decisions based on fear rather than understanding. And when money is involved, emotional decisions can be the most dangerous ones. So what should someone watching this actually do right now? First, Check whether your credit union is federally insured. Most are. Second, understand insurance limits so you know what protection exists. Third, avoid reacting instantly to fear-based content without verifying information. And most importantly, remind yourself that financial stability comes from informed decisions, not panic moves. The real power isn't in predicting disaster. It's in understanding how the system protects you when stress happens. And this is where things start getting even deeper. Because the reason this topic feels so intense right now isn't only about credit unions. It's about something bigger happening inside the minds of everyday Americans. Economic pressure, rising costs, uncertainty about the future. All of that builds emotional tension. In the next part, we're going to unpack why so many people feel financial fear right now, how internet culture amplifies that fear, and the hidden psychological triggers that keep viewers watching until the very last second. Let me ask you a real question. Why do financial warning videos feel so powerful right now compared to a few years ago? It's not just the headlines. It's the emotional climate people are living in. Inflation hit household budgets. Grocery bills feel heavier. Housing costs feel out of reach for many people. Interest rates changed how borrowing works. Even if someone's personal situation is stable, the overall atmosphere feels uncertain. So when a video pops up saying credit unions are under pressure, it doesn't feel like random news. It feels like confirmation of a fear already sitting quietly inside millions of Americans. And that emotional connection is exactly why this topic keeps trending again and again. Now let's go deeper into what the word failure really means, because misunderstanding this single term causes most of the panic. A credit union failure usually doesn't look like the dramatic scenes people imagine from movies. It can mean a merger into a stronger institution, or a controlled liquidation where regulators step in and protect insured members. The goal's not chaos, it's continuity. In many cases, people maintain access to their insured funds with little long-term impact. But the internet doesn't reward calm explanations. The internet rewards emotion. So the moment someone hears failure, the brain instantly translates it to danger, even if the real process is structured and managed. Let's talk about Delta for a second, because this is where balance matters. Official reporting has shown that the insurance fund supporting federally insured credit unions still holds significant assets and continues to generate income. The equity ratio, which basically reflects the health of the fund, has been reported around levels considered stable by regulators. That's an important detail, because viral narratives often focus only on risk and ignore resilience. Again, this does not mean everything is perfect, or that challenges don't exist. Economic conditions always create pressure somewhere in the system. But pressure is not the same thing as collapse, and understanding that difference is what separates informed viewers from scared viewers. Now I want you to imagine two different people watching financial videos online. The first person watches a dramatic title, feels fear, and immediately thinks about pulling money or making a sudden move. The second person watches the same video but asks questions. What is insured? What is actually changing? And what protections are in place? One person becomes more anxious. The other becomes more confident. Same information, completely different emotional outcome. And this is why responsible explanation matters so much on YouTube, especially when your audience is American families trying to protect their future. Here's another emotional truth nobody says out loud enough. Financial fear spreads faster than financial facts. Comment sections fill with worst-case scenarios. People repeat things without checking sources. And suddenly a rumor feels like reality just because enough people said it. That's why you'll notice many viral creators using phrases like "they don't want you to know" or "final warning." These phrases trigger curiosity and urgency. They make viewers feel like insiders discovering hidden truth. But as a smart viewer, you should always ask, is this giving me clarity or just adrenaline? So what's the real question we should be asking? Not, is everything going to collapse? But how does the system respond when stress happens? And the answer is that insurance funds, regulatory oversight, and structured resolution processes exist exactly for those moments. They are designed to protect members, maintain confidence, and prevent domino-style panic. That doesn't mean zero risk, and it means risk management exists. Let's make this personal again. Think about someone who spent 20 years saving carefully. That money represents thousands of small choices, skipping vacations, working overtime, planning ahead. The worst thing that person could do is make a rushed decision based on a dramatic headline without understanding the full situation. Emotional reactions feel urgent, but strategic reactions create long-term safety. So what should viewers actually do right now if they're worried? Learn the basics of deposit insurance. Keep balances within insured limits if possible. Stay informed through official updates instead of relying only on viral clips. And maybe most importantly, ask questions instead of assuming the worst. Knowledge lowers fear more effectively than reassurance alone. And here's the deeper emotional question I want you to think about. Are we really afraid of credit unions failing? Or are we afraid of losing control in uncertain times? Because when people feel uncertain, they search for answers that make them feel safe again. That's why this video exists. Not to scare you, but to give you clarity where confusion normally wins. In the next part, we're going even deeper into the future side of this story. What happens if economic stress continues? What smart Americans are doing right now to protect themselves emotionally and financially? And why the difference between panic and preparation might be the most valuable lesson you take away from this entire video. Now we reach the question. Almost everyone is secretly thinking, but few say out loud. What happens if things actually get worse from here? What if the economy stays tight, more institutions struggle, and the headlines keep getting louder? This is the moment where most videos either go full fear mode or fake optimism. But real confidence comes from understanding how systems are built to handle pressure. Because financial systems are not designed expecting perfection. They are designed expecting stress. And that single fact changes the entire way you should look at these headlines. Let's bring this back to reality. Financial institutions rise and fall over time. That has always been true. What matters is how the system responds when one institution has problems. The insurance framework for federally insured credit unions exists so that members don't face chaos when change happens. Reports have shown the insurance fund maintaining billions in assets and continuing to operate within expected equity ranges. That doesn't mean nobody should ever worry. It means the structure intended to absorb shocks is still active. And that's a huge difference from the emotional image many people imagine when they hear dramatic warnings online. But let's talk honestly about emotion, because numbers alone don't calm people down. Americans remember past crises. People remember moments when headlines felt scary, and that memory creates emotional weight even years later. When a new warning appears, those old feelings come back instantly. That's why this topic feels bigger than just finance. It touches on trust. Trust in institutions. Trust in information. And maybe most importantly, trust in yourself to make smart decisions under pressure. I want you to picture something. 2 headlines appear tomorrow. One says, financial stress continues. The other says, system protections remain strong. Which one do you think goes viral faster? Of course, the scary one. Fear grabs attention because the brain wants to survive. But surviving financially isn't about reacting to the loudest headline. It's about understanding the full story behind it. Now, here's a question that might change how you think about money forever. If you couldn't control the economy, what could you control instead? You can control knowledge. You can control preparation. You can control how you react emotionally. And those 3 things matter more than predicting every future event. Smart viewers right now are not running in panic. They're checking that their accounts are insured. They're understanding coverage limits. They're avoiding impulsive decisions. They're building emergency savings slowly, reducing unnecessary debt when possible, and focusing on long-term stability rather than short-term fear. Those actions don't feel dramatic, but they are powerful. And ironically, calm preparation makes you stronger than panic ever could. Let's get emotional for a second, because this is where the real connection happens. Your savings are not just dollars. They represent years of effort, late shifts, sacrifices nobody saw, dreams you haven't reached yet. That's why protecting your peace of mind is just as important as protecting your balance. And peace of mind comes from understanding, not guessing. So if another dramatic title shows up tomorrow, ask yourself, is this giving me facts or just feeding my fear? Am I reacting to emotion or responding with strategy? Those questions alone can save people from making rushed decisions they later regret. And here's the truth. Most viral videos won't tell you. Financial stability is rarely destroyed overnight, but emotional panic can damage people very quickly. That's why staying informed, calm, and thoughtful matters so much. As we close this, I want you to take one final idea with you. The reason these videos trend isn't only because people are scared. It's because people are searching for certainty in uncertain times. They want someone to explain things without extremes, someone who respects their intelligence while understanding their emotions. So if you made it all the way to this moment, you're already doing something powerful. You're choosing understanding over panic. Keep learning, keep asking questions, stay aware of the facts, but don't let fear control your decisions. Because in the end, the strongest financial position you can have isn't just money in an account. It's the confidence that comes from knowing exactly how the system works and how to protect yourself, no matter what headline appears next. In currency devaluation or geopolitical uncertainty,